Hey guys, what's going on? Steve here with another video about stocks. So today I want to talk about long-term and short-term positions. So what that basically means, if you're brand new to the stock market, you have no idea what either of that means. Basically, long-term and short-term, when you buy a stock, there's obviously a date from when you bought it. Now, short term is if you sell that position. So if you were like, say the stock goes up 10% and you're like, oh, great, I made 10%. I'm happy with that. And I want to take my money now. Well, that would be considered a short term gain. So basically, if you make X amount a year in the market, you're going to obviously have to file it on your tax returns, and they'll charge you a percentage tax of the profit you made of that sale. So if, let's just say you had a stock for $100, you made 10%, so you made $10, so you pay tax on the $10. So short term, it depends on the situation, but really I feel like long term is better. And what long term is you hold a position for a greater than a year. And once it hits that year, the day it hits a year, 365 days, it goes to long term. Therefore, in my opinion, there are a lot of more pros than cons to long term. What I do is I do long term investing. The arguably greatest investor of all time, Warren Buffett, he does long term investing. So, I mean, not saying he's perfect or, I think he's one of the best investors ever, but really how I look at it is, okay, well, if this guy does it, why wouldn't I do it? So that's kind of how I look at, how I wanted to invest. I didn't want to day trade. I didn't want to do short-term investing. I didn't want to do options. To me, all that is riskier, and then people get a bad taste in their mouth, and then they say, investing doesn't work. So because they really don't know what they're doing, and your chances of failing are higher. So I do long-term investing, and that is what I'm gonna teach on this channel. So if you want to start, this is basically the details of short and long-term. So we'll talk about the pros of short, because I don't think there's many personally. I'm just talking, I'm not getting into the nitty-gritty details of each, but like the meat of either of these, what you do is right here, in my opinion. So short term, a pro is you make quick money if you do hit a stock and it can run 10%, especially right now, like we're coming out arguably of a recession, the market's super volatile. So if you buy on a dip right now, you could get lucky and get a 5 to 10% return based on, depending on what you're buying. So for some people, 10% is great, or 5% or 3% or 2%. Like they just want to make $1. Like if they make $1, they're happy. In my opinion, you won't always get lucky and you won't always make money. So, it's so little, like if you make 2% here, 1% here, like it's just not sustainable and you're not going to compound. So, and in my eyes, it's not worth it. A lot of people that don't know what they're doing, they'll, Google best stock of 2021, because that's what we're in now. So, honestly, I don't think I've ever done that in my life, and I don't think I ever would, because you're going off like Wall Street's opinions and analysts, and it's just hype. It's like, what kind of analogy can I do? It's like seeing a car on the road and, like the salesman saying, oh, this is the best car out there. Well, are you really going to believe that dude that wants to sell you that car? Like that's not true. He's just pushing an agenda for his, company or, like news outlet, like whatever. So riding the hype doesn't work long term. You might get lucky and get like 5, 10% sometimes, and you get one right for every 2 wrong, and you say, oh, this is stupid. You don't make money. Everyone loses money. It's just like gambling. Like short-term investing or day trading, I consider gambling, just because you really can't predict the future, right? Like you can't, like next week we can't, like, okay, like let's just look at the weather, for example. Like you can't say, okay, in the next 10 days it's not going to rain. Like you really can't. Like, that's how I kind of look at like short-term and day trading. Like, you can't predict the future. Like, is the president-elect gonna lock down the country coming up? Like, we don't know, so it's silly to do, short-term investing for those very reasons, because you can't predict it. Cons to short-term trading, on top of all that, tax. So if whatever tax bracket you're in, at least in the United States, you're gonna have to pay on the profit. So if you made like you have $100, you made 10%, you made $10. Depending on how much you make, if you have a 9-to-5 job or whatever, when you file taxes at the end of the year, they're gonna tax you on that gain, whatever your normal tax is, basically. So it's gonna be somewhere probably between 22 and 40% for most people. So if you make a lot of money in the market one year, every 2, 3, 5%, I mean, it's really a big difference when you're talking about compounding. So that's a con. Like I said, I already said this, more likely to lose money. You absolutely probably will. Then that leads to bad experiences. People diving into the market don't understand really what's even going on. So then they say, if they have a bad experience, they tell their friend, oh, it doesn't work, or oh, it sucks, or this or that, but in reality, they have no guidance and they don't know what they're doing. So it's silly. Like, it's just being you just don't understand what you're doing. And it's frustrating when people say that. I mean, that's what I'm trying to say. I said this also, it's hard to predict, just like the locking down the country or something like that. Like, you can't predict that. So short-term investing for these reasons, to these pros, it's just not worth it to me. It's not my style. Some people do have success on it. Like, someone would say, oh, well, I day trade, or I do short-term trading and I've made, 6 figures this year. Like, that's awesome. But I think it's a lot harder. It requires a lot more research. You got to stay really involved. Like, you got to actively look at every piece of news that comes out with these, whatever stock you're in, if you're short-term trading, because you can't, you're riding, they could have a bad earnings report, and then guess what? Then the stock's probably going to fall. And if you're a short-term trader, then you just lost money. So it's just not worth it, in my opinion. Now, long-term investing, which is what I do, again, I've had a lot of success in it the past year and a half. I know that's not a super long time in the market, but I'm hoping I can relay and relate to someone that's newer in the market, or a year or two in, that is trying to take it to the next level or start. So to explain this, long-term investing is, again, when you have a stock over a year, 365 days, it moves to long-term. So when you're, in whatever you use, Fidelity, Robinhood, Webull, TD Ameritrade, whatever, when you look at your position somewhere, it's just a short or long. So when it hits long, so that's how you know, it will say long. So the good thing is, most people starting out will be in the flat 15% tax bracket. So that's great. So if you had, $100,000, right? Well, would you rather be taxed 15%, or would you rather be taxed probably 40 or 35%? So you're talking like a $15,000 to $20,000 difference just in taxes if it were to be a long-term position. So you really want to make sure everything's long-term if possible. Now, I'd be lying to you if I said, okay, every stock I've bought, I've kept in the past year and a half. No. And the reason being, my intentions are, but if something comes out that's bad, like you just hear like the CEO steps down, or there's fraudulent activity, or they're not paying out dividends, or something major. If that's the case, I might sell my position, because I don't see the future of that company growing anymore. I see it declining. So if a company is declining and I don't like the direction they're going in, I will sell it. So that is the only time I'll really take a short-term gain, but my intention when buying the stock is not to do that, but things do happen. So if you follow my channel and you play the stocks I play, if something like that happened, I would let you guys know right away and be like, hey, this happened. This is why I'm selling. I feel like, in my opinion, you should get out for that reason. So, that's a little off there on a tangent, but that's why I like long-term. So most of us would be in 15%. At most, usually it's 20%, which when you're talking like millions, if you ever get to that level, which I think anyone can do in time, really, you're only 20%. So when you're talking 20 or 40, like you're losing so much money in taxes. It's just, you just want to stay away from high taxes. So long-term investing is where it's at for that reason. Predicting or pricing futures. I think if you buy in a good company and you look at their 3 to 5 year plan and vision, growth, analysts, estimates, you research the CEOs and all that. If you really believe in the company, it doesn't matter if, let's just say, the country goes on lockdown again for a couple months or 6 months. It doesn't matter if you have a 20, 30% dip in the market. It doesn't matter, because at the end of the day, do you think in 3 to 5 years, this company will be more profitable, bigger, and growing than what it is now? That's the mindset you need. You need that mindset. So in my opinion, it's easy to predict a company that succeeds. So in my next video, I'm going to make, I'll share one of the stocks I have, and I'll tell you, I'll give you an example. But really in this video, I just want to get long-term, short-term, and get that explained to you so you understand why I do long-term and what the benefits are. Like